It's like it's been building, and then you got to that point where when you really start seeing hot money and funds coming in just because things have crossed moving averages. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a Tuesday afternoon, recording Tuesday, September 30th at 1:57, with plenty happening in the gold and silver markets. And as we will touch on today, I've been seeing this develop, and it's like you see things happen in gold and silver in stages, and we're now at the stage where it's been building. We started seeing generalist money come in, and I had thought we had not yet gotten to the point where we see hot money and momentum chasing money pile in. Although we may not be far off, as we will dig into today. First, a quick look. Here are the gold futures up at 38.72, which sure is pretty incredible. Another $17 higher today, and we see the high was set here at 38.99. It's in the day range, so that was set today, and looks like that happened right around there. So early this morning, in East Coast time, when gold futures almost cracked 3,900. I guess when you crack 3,900, 4,000 not that far away. And here we are on Tuesday, September 30th. So you'd have to think $4,000 gold by the end of the year. More than possible, not a guarantee, but either case, if we take a quick look at silver, we can see finally a little bit of a sell off today. Down 45 cents, was down almost a dollar, probably a little bit over a dollar when we were down here at 46.02. So a little bit volatile on the silver market, yet there you go. You still have the futures over 46 bucks. I'm guessing spot over 46 right now as well. And here we go. It's like you have a perfect set of conditions where, along with everything else that's happening geopolitically, with wars that don't seem to be coming to a cessation anytime soon. Here's CNBC. This was from a week ago. Gold hits record high after Powell's speech. And we see that last week, Powell gave a speech where raised concern over the state of the U.S. economy, which some of us were raising last year when he cut rates, despite saying the economy was strong, yet now he is concerned primarily that near-time risks to inflation are tilted to the upside and risks to employment to the downside, which I think basically means he's realized that
they need the rate hike and a rate cut. They need a rate hike and a rate cut.
now, as a result of that unfortunate dilemma, you see things like Bloomberg talking about silver hitting 45 for the first time since 2011. As gold nears another record, this was from last week, so gold is higher and has broken that record since then. Yeah, here we go. Inflows into global gold ETFs surged to a record 10.5 billion so far in September, with year-to-date flows exceeding $50 billion. The ETFs have outshined all other gold demand sectors this year, and they are the single most important contributor to the gold price rally in our view. While I won't go through all of the ETF inflows charts again today, we talked about that last week. That is one of the primary things driving the gold and silver pricing. Certainly physical demand in the Far East, although while I think it's changing, and that's what makes this current moment so interesting, is that it's like it's been building, and then you got to that point where when you really start seeing hot money and funds coming in just because things have crossed moving averages. Felt like that was like they were awake, not yet ready, although some of the conversations that I've been having, especially with some of the junior miners, where companies that were really having a hard time raising money a year or two ago, now there's investing groups coming at them saying, "Hey, here's 5 million, here's 10 million. Can you take it?" I also talked with someone who's associated with a bullion dealer last week, and he said that even though the margins were bigger in 2021, the bullion dealers are starting to make as much just because they are starting to see demand. And I think where that leaves us is that, if you see gold go back down to 3,400 and silver goes back below $40, this would not apply yet. If a month or two from now silver is above $50 and gold is above $4,000, Yeah, I think we're at the point where it's like right on that bubble where depending on which way things go here, you could start to see the type of money pour into the gold and silver space that most gold and silver investors, I would suggest, have often been expecting or anticipating. Of course, that's not going to be so easy to do on the silver side, as Bob Gottlieb, former JP Morgan Precious Metals Managing Director, pointed out in a recent LinkedIn post, which I did touch on in yesterday's column at our Arcadia Economics Gold and Silver Daily Substack, which you can find at goldandsilverdaily.substack.com, conveniently named and URL'd. And here, fortunately, I broke out some of the highlights. Again, this is from someone who used to be high up on the desk at JP Morgan. Silver broke 45 yesterday, on its way to 50. I like that. Bob's not he's not waiting around and saying on his way to 50. And talks about the whole tariff uncertainty, and then silver OTC in London is getting tighter. I've been highlighting articles, evidence, quotes, comments, so that if you're a regular watcher, that shouldn't come as new news. And if you're not, hit that subscribe button now and the notification bell. I'll wait. Come on, go and hit it. And if you've already hit both of those, hit the thumbs up or do something or tell someone about it. Because everyone should know that inflows of 95 million ounces went into the ETPs or ETFs in the first half of 2025, which surpassed all of 2024. In other words, it was a lot. And we're in the fifth year of running deficits, and industrial demand is stronger. Now, again, if you're watching here regularly, that's not necessarily coming as new news, but basically, all right, metal going into ETFs, things are tight in London, which we've talked about plenty. So if it gets too low, which the former JP Morgan Precious Metals Managing Director thinks is the case, in agreement with Daniel Galley of TD Securities, who's written on how it could be just months away. So where are they going to get the silver? Well, fortunately, Bob says, what can bring liquidity back to silver? At one point, what price will motivate people to sell their silverware? I don't believe that the silver stored in the private warehouses will come out, as that is generational silver passed on from family to family. And then here he talks about how the possibility, and I've wondered this as well, does some of that COMEX silver go back over to the LBMA? Although he says it is very possible we can see shipments reverse back to London if the OTC London man continues to get tighter and there are no longer tariffs. Spot London will need to trade 10 to 15 cents above CME futures for this to happen. So I don't know if you would want to call that its own breakage of the market in some sense, but the you're gonna have backwardation, or else we're counting on grandma to sell her silver ounces to reconcile this. So not ideal. Again, the silver that went over to New York here, he mentions in private warehouses, it's generational silver. It's only going to be passed on from family to family. Hard to know the people holding that or who's holding that. Some have speculated it was on behalf of the government ahead of them saying that silver is a critical mineral. Don't know if it'll come out, certainly at a higher price. I imagine some silver will come from some locations, but I just think it's incredible that a couple of years ago it was me and other people on YouTube saying this. Now you're hearing the same thing from multiple banks. Oh, and while that's happening, let's not forget that in SLV the other day, the borrowing fee has surpassed the summer highs, while at the same time, SLV shares outstanding are at the highs of the year. So we have a surge in the lease rate to borrow SLV shares, but fear not, because as Bloomberg reported, so again, going out to the mainstream and institutional audience, lease rates for silver, platinum, and palladium too have all surged well above their normal levels of close to zero, raising concerns about dwindling stockpiles in London. There it is again, dwindling stockpiles in London. Now, aside from my daily silver time, I study a lot about the subconscious mind and just the way that we don't often hear a new idea and change instantly the first day. It often takes a series of repetitions. What do they say? It takes six data points before you end up buying something. And here we're getting on a regular basis things like lease rates, dwindling stockpiles, inflows into ETFs backed by metals also added to the crunch. So this stuff is getting out there. And again, I think we're at a turning point here where maybe the prices come back down and you can buy a little more time. But if they don't, it's going to be fun to see what happens. And sure, it would be fun to see what happens after silver breaks $50, of which it is not far away. So, a few last notes wanted to pass along. This has been interesting here. Global solar installations surged 64% in the first half of 2025, which on one hand would make you think, well, that's going to be good for the silver numbers. And I think it is. Although I know there's people out there that are feeling that the silver solar demand numbers are not big enough. I don't know exactly what they are, but I will point out that there is a lot of thrifting going on. And I actually called a few people to check into this yesterday and was saying, well, because here, silver demand, according to Bloomberg, silver demand for solar modules installed this year may drop to 194 million ounces, down 7% from last year. And my thought was, well, I understand there's a lot of thrifting going on, but can it grow 64%, yet still that much thrifting that you would actually have a decline? And I was told yes, that there is that much emphasis. Now, these seem somewhat divergent, and I'm guessing the answer is somewhere in the middle. And I'll continue to dig into that one and report back what I find, but just keep in mind both of these things could be accurate, and where the actual numbers come out, we'll see in a couple months. Unless I can find out, we'll see what we can find out sooner than that. But takeaway here, there is a lot of thrifting going on, and I would expect that to continue to go on. Although we also have some factors that will help to support the demand for the metals to continue to go on. Here they're talking about gold wavering as the US government reaches another potential shutdown, and we won't dig into the minutia of that today. Aside from, again, the world's supposed safe haven currency and debt markets, yet it's a somewhat routine occurrence that they can't keep the government funded. It's consistently, habitually on the verge of a shutdown, and it's the same government that also said that we might end the war in one day, and now the latest we're hearing is more sanctions on Russia. Which, if you had to pinpoint one single reason for the gold and silver rally over these past couple of years, I mean, I don't think it would be fair to just say it was only this, but if you could only pick one, that decision be at the top of the list for me. And so if we see more of that, you can extrapolate how you think that will go. Although, fortunately, in addition to our channel here, I might add that we do have a daily column that goes out each day, which can be found at goldandsilverdaily.substack.com. And a lot of good stuff that we do not always have time to get into on the show. But one of the things in particular that people have been enjoying is the Arcadia Silver Report, which we posted a few weeks ago, got in there just in time, and that was published. And if you scroll to the bottom of this one, you can click that and you see the whole report, and you can read the whole report. It's free, so there's no cost to that. And just wanted to take the time to write out what's happened, where we are, the key factors, and also what's realistic to expect going forward. So, either case, going to wrap up for today, but go over to the Arcadia Substack, get your copy of the report. And in case you still need a little more silver talk before you wrap up for now, well, here's a video we posted recently that talks about some of the other reasons why the market is starting to notice what's going on in silver.